Welcome to the Trading Market Technicals morning call video for Wednesday, February 26th. Another quiet day in the markets. Seems like we are digesting the move that we previously had for the last couple of weeks. Dow Jones down 27, Nasdaq down 5, S&P down about $2.50, and the Russell down 61 cents. So very, very quiet. Although there have been a lot of choppy price action the last couple of days. We had this week. So it looks like the markets are trying to figure out some sort of a direction here. And until that happens, patience is definitely warranted. And there's no question about it. And I'm not going to get into any indicators because really nothing has changed. But I want to show you two charts, two ETFs. One is the EEM, which I've shown you many times. And this is a retracement rally into resistance. And now we're starting to falter again. Remember, the EEM, the emerging markets in China, is the one that started to sell off several weeks back. Okay, now we've actually recovered, and now we're looking for another move lower. So keep an eye on the EEM, the ETF, the emerging markets ETF, for any clues and signals. And also even when you go, before you go into bed, take a look at what's going on in Asia, because it is a driving force in our markets as well. Take a look at China real quick, and then we'll go right into the chart segment. China here, not looking too pretty. As we can see, we're gapping lower, China, pretty quiet in the overnight session of the last couple of sessions, but I would really watch this because to me, there's a lot of red flags out there. It doesn't mean the markets are not going to go higher. It just means that we don't want to be caught off guard. And I like to be patient, and even if take a step back, watch what the markets are doing. Let us digest what the signals are giving us, and then trade accordingly from there. Okay, so let's get right into the chart segment. Now, interesting developments, as you can see here on the spiders, and I'll show it to you on the regular spider chart, but I have the overlays here. Gold continues to move higher. We have bonds moving higher as well, and we have the S&P equities. So one of these markets are going to give, and to me, we have the shooting star in the spiders the other day. So we had that big push up, and now we retraced back some of the move. But we're sitting at the upper end of the range. Nothing really too crazy. Nothing wrong, actually. It's quite bullish, but it's holding steady at the upper end of the range without any type of sell-off. I mean, the market is very well bid up. We had a vertical move off the lows. To me, the longer it stays sideways means that there's opportunity for another push higher. So you don't want to be looking to short the market here. If you're looking to try to pick a top, it's just not worth it. I would definitely be waiting to see what happens, and this low from the shooting star candle would be confirmation that we are at least headed on some sort of a pullback here. Okay, but again, I don't like to see gold up, bonds up, and equities at the same time. That's, to me, is the biggest warning sign of all. Okay, shooting star, as you can see here. So that I like to see 184 get taken out on a closing basis for the spiders to start alleviating some upside pressure and start looking for some lower lows and lower highs. So 184 is what I'm looking for a possible retracement and start to move lower again. But again, if you can see here, look at what we have. We had a furious day up. I think it's 14 out of 16 days up now. It's pretty amazing stuff. Most of it, I believe, is driven by algorithms. Like we had the other day, we had to move up for no apparent reason. There was no news. And I just think that the algorithms were looking for some buy stops, and sure enough, triggered a short covering rally, and we went into new highs on this candle here. But again, 184 I'm looking for. Obviously, if we take out the high of this shooting star, this shooting star right now is just a candle. It means nothing other than the fact that it's going to break below this low or this high of the wick. Okay, and if it does, then I do think we continue to move higher. And I know it's crazy, but I would not discount anything what the markets do here at this point in time. Transports, another weak sector, as you can see. We did have a little bit of retracement, but again, moving lower. We have volume, which that's decreasing. Increasing volume on any moves lower is not a good sign. But again, it could do whatever it wants. At the moment, I like to see this transports another red flag for me in the market saying, okay, well, you know what, we're starting to move lower here. We're starting to break lower on higher volume, that is a concern for me. And if you look at some of the transportation sectors, the transportation ETF, you'll see that several key components are really breaking down, and that's not a good sign. Okay, and we are, as you see our volume profiles here, we're heavily into some supply areas up here, so we got some good resistance. It's really going to need to break higher to alleviate some of this downside pressure. But transport's another big warning sign. Russell didn't go anywhere yesterday, as you can see, but again, didn't sell off either. So there's always two sides to the story. And when I see just things aren't lining up the way they should be, and we see the markets moving higher, to me, I've mentioned this many times, let's take a step back. Let's wait until see what the markets do. It doesn't mean if you see a good quality trade setup, you can't take it. Absolutely, but I would just take a step back here and just wait and see what happens. But at the moment, we have a little bit of a little doji candle here on the IWMs, basically an indecision, telling you other than the fact that it doesn't know which way it wants to go. Until this thing starts to break lower or higher, remember, we have plenty of room to run now. We're back into this bearish rising wedge, as you can see here. So this bearish rising wedge is now a failed bearish pattern. It was obviously you took it quickly, but if you're waiting for that back test and it didn't break that candle's low, that's why I always like to wait for the back test to really give you a good indication that we're headed lower. That candle's low was 113.84. We tested it, didn't break it, and then we ran back up again. So that's why you always got to wait for that confirmation. Qs, as you can see, Qs elevated here at the upper end of the range. Doing okay. I mean, some of the big cap tech is doing okay. But what I notice when I do my scans in ETF, healthcare, utilities, and consumer staples are the ones that are moving higher as well. That's also a red flag to me. These are the safe haven sectors. That's where people hide money for protection, and that is the three that are moving higher. That is another big red flag for me. So until everything starts to, when all the ducks are lined up in a row and everything is humming in all cylinders, that's when I start to move back. Because again, guys, we could turn around, markets down 20, 30 handles. You don't want that overnight exposure. Here is the diamonds. Weakest of the 5 indices that we follow, but as you can see here, we're just kind of hovering around here. And again, the diamonds could break out, the Dow Jones could break out to the upside, and then everything starts to move again. But right now, it's just consolidating above the 50-day moving average. GLD, comfortably above now the 200-day moving average, and making another base pattern. So again, to me, this is a very interesting pattern here. I'd like to see gold move back down and hold this 20, create a base and move higher. I would not be looking to chase gold here. I have no trade in gold. OIH is what I was showing you about the oil service providers. Schlumberger, Halliburton, Baker Hughes, the biggest 3 in this ETF. I like it. I like it a lot. It's moving higher. There's another stock, the NOV, that we were looking at yesterday. In a decent spot. Obviously, I'm not going to show you the chart. It doesn't look pretty, but you'll see we had a fib cluster there which held. And if you want to really be cautious, and let me just show you Schlumberger. Did my favorite. I love the base building right up in this area. As you can see here, we have beautiful, beautiful volume profiles just holding here, confirming this base. Now we have broken out of this base on volume. So the next pullback into this 90, even above this 20, easy to manage. It'll be below that 50, and then if you get stopped out, you could try it back below this bottom of this base again, which would be the 200. But real nice. I wouldn't chase it, but I would definitely be looking at Schlumberger, Baker Hughes, and Halliburton, definitely. Now, the other one that I was looking at was National Oil Well. Now, why do I like this? Well, I like it, number one, we're above this volume profile here, looking really good. There is a fib cluster right up in this area, Fibonacci cluster, which I like, and we tested it and we ran back above it. Now, what really needs to do is break out of this downtrend channel. If it breaks out of this downtrend channel, regains the 200, and then could break out above the 50-day, then I really think this has a lot of momentum to the upside. This risk reward is very good in NOV. Okay, so keep an eye on the NOV as well as the other 3, and this is also in the OIH ETF. XOP, the oil and gas, again, fantastic, great breakout. I'd like to see a pullback here. Remember, guys, the reason why I would say I like to see a pullback is because if risk is off and the markets sell off pretty hard, they're going to sell everything. So you're going to have a better opportunity at lower prices. Same thing like I'm going to show you with the builders. It's the same thing. VLO is one of my favorites in the XOP, which is the oil and gas exploration stocks. VLO, which is a refiner, one of my favorites. Again, it needs a little bit of a pullback. All of these stocks that I've researched and looked at, they all need pullbacks. But if we can get it, I think you'll be well rewarded. If your patience is, if you can wait and be patient, I think you're going to be well rewarded as well. Here's the XLE. As you can see, again, needs a little bit of a pullback. We did break below that bearish rising wedge. We came back above it, failed this pattern here. This was that candle, that red candle, needed to break below 86.30. It did not and ran back up again. Okay. USO, as you can see, oil's doing well. A little bit of a pullback, needs to stay above the 200, and then that'll help all the oil stocks as well. Home construction, as you can see, right? Remember, we have the home construction industry as well as a whole is getting money put to work, and there's no question about it. It's getting accumulated, but we need pullbacks. We can't just go and buy, because what's going to happen is you're going to get one of these while you're buying this, and now you're going to be in the red. So be patient. It'll come to you. XHB, the ETF, the Home Builders ETF, and then look at the Lennar. As you can see, every pullback is being bid up. Every pullback. So we want to wait for a pullback back to the 20. Right? You have this revision to the mean. As far away as we get to the 20, eventually it's going to come back. So be patient, because it will come back. Pulte Homes doing fantastic. As you can see, the Bollinger Bands energy is building. We have higher volume accumulation, as you can see here, than a distribution. That's telling me that this is getting accumulated. And as you can see, look at KBH. Great day yesterday. Now this is my favorite, because this big base building, and it hasn't gone anywhere once the home builders really do take off. And this is one of my best ideas for 2014. Now, the home builders and the banks. Now, the banks haven't shown it yet, but it's going to be, especially with the Volcker rule in place. Banks are going to need to aggressively lend. It's going to fuel the home building and the home construction industry as well. Home improvement loans. That's going to be another sector to watch. XLF, as you can see here, not really doing too much. They were a little bit weak yesterday following a good day. Citibank had a nice big day, but then clearly reversed. Again, I would not touch Citibank, but I'd wait until we get back above the $50.10, and let it build another base. If it builds another base, that's when I'd be looking to nibble in Citibank again. And if you long it, you just have to be patient. JP Morgan, one of the stronger of the two. And then we have Goldman. As you can see, they all reverted back. They had one day. It was a one-hit wonder for the banks the other day. But again, watch them, because it gives you a good sign of risk as well. And, banks were weak yesterday, so markets really didn't go anywhere. But again, well bid up, as you can see. In the pre-market right now, we're up about 4 handles. So markets are not going anywhere. They're not going to the downside. And I really would suspect that this market goes nowhere the next few days. Maybe you get a little bit of a blip, but you remember, end of month mutual fund inflows, which is going to prop up the markets again. So remember, don't get too heavily short. If you want to leg into a short, if that's what your plan says, then do so, but I would not be putting all money to work on the short side, especially at the end of the month. We have mutual fund inflows that come in the last couple of days of the month, and then following 1 or 2 days of the new month. So use caution. Remember these cycles. So you don't want to be running into a freight train. Lastly is Apple. Apple here, like I mentioned before, let it build a base. Right now it's in a downtrend, a short-term downtrend. It's flagging as a bull flag at the moment, but I think if it loses the 20, I think you could see back the lower prices again, maybe to test the 200. Let it build a base again, and then look to buy again. Okay? All right, guys. A lot of patience here is needed in this marketplace. Let's see what happens. Let's let the market tell us what direction it wants to take. Right now we have a short-term uptrend, but with a lot of red flags, so definitely use caution. Have a great day. We'll speak to you tomorrow. Take care.